It's very clear. Volatility is here to stay. Not for a year, but at least as long as Trump is in office. The last 3, 4, 5 months have just been insane, right? I mean, all over the world, but certainly with the rupee. I mean, we all know what's going on. I mean, the rupee fell below 88. RBI came in, it went back, it steadied, meaning between 85 and 86, then shot higher above 84, fell again. It's now again in its 85, 86 range, but it's bouncing around like never before, like seemingly like never before. And I guess, because the last few years, RBI was hell bent on keeping the rupee just tightly controlled, which I think was the wrong policy. Now, the good news is that the new RBI governor understands, seems to, that volatility is a necessary part of life. Obviously, too much volatility is a problem. But the reality is today, with Trump and his approach to life, I think we're going to have to live with serious volatility, at least for as long as he's in office. So, what do? I mean, everyone is, of course, nervous, right? And you need to have a process which, A, protects your bottom line, and B, bhai, kuch mile to very good. But the real point is protects your bottom line, particularly in markets like this. Now, there are a lot of companies, several of our clients indeed, professional companies, good-sized companies, who, having looked at the rupee for many years, they say, Baba, rupee is always falling here. So it makes no sense to hedge, let's just stay open for spot. And certainly, occasionally, or a few years, you do see that. But ultimately, your policy should really not be something you chop and change. You should have something that is steady, that will work reasonably well for 4, 5, 6, 10 years. And if you look at a 5-year average, what people might be surprised to find is that hedging on day one and staying open to spot, the difference is 0.01% on average. I mean, there are differences in some years, no question. But on average, how do you know which year you should stay open and which year you should go for spot? And which year you should hedge forward? Fortunately, you can come to us because, as you know, we've got a really highly well-developed, structured program for hedging, Mecklai Hedge Program, which on a rolling 5-year basis beats either spot at maturity or day one forward, at least as of today, rolling 5 years, by 1.24%. That's 1 rupee a dollar. I mean, that's a huge amount. Every $10 million you got, that's 1 crore of rupees. So settle down, get focused, and let's work together.